Good afternoon, everybody, and welcome to this edition of Live Market Analysis. More specifically, it's all about US stocks. We're going to head stateside. We're going to investigate, pick up the pieces perhaps of our portfolios over there. And I'm sure there are still going to be stocks we can add. But if anything, there's just as much value in working out which stocks to maybe start to get rid of. My name is Carl Capolingua. I'm Market Analyst over at ThinkMarkets Australia. It's a pleasure to be with you, of course. The agenda is pretty simple. I'll look at a few companies myself. I'll talk maybe about a couple of macro themes, but ultimately it's about getting your portfolio questions answered. So find the chat window somewhere there in your Zoom application, if that's where you're watching me, or if you're watching on any of the streaming services, YouTube, LinkedIn, Twitter, and Facebook, you have the ability to send me a message as well. Let us head over to the charts. I think it's a good place to start today. And you saw, if you're watching on YouTube, the recording, you saw me mucking around there with the spreadsheet. And maybe I'll just quickly mention what we were talking about before the session started. And what we're seeing here is US 10-year notes on the rise. Not good. It's bad if you own stocks. If you're wondering why your portfolio is taking a beating, it's because this thing keeps going up. And also, this thing keeps going up as well. And I read an article this morning saying that US mortgage rates have topped 7%, and the average through this week hasn't been this high since 2002. And it was 2002. We were also just coming out of a recession, to be fair, as well. But the upshot of these rising yields is you're just going to see just a tightening. I'm not even on the right screen. There we go. Tightening, a crimping of consumers' ability to spend, but also of businesses' profits as well, because if they do have debts, the cost of servicing those debts are going to increase. And that's going to mean double whammy hit on their profits. So lower consumption from us and higher costs through borrowings for businesses. Bad news. The other bit of this here, I talked about this yesterday, these real yields. So this is the 10-year inflation protected yield. So you're getting back inflation through the mechanism of owning this, and effectively you're left with what you get net of inflation. And that by definition is our real yield over 10 years, and you can look at it over 5 years as well, the 5-year tips. So looking at 2.2% in the, let's call 5 years, medium to long term. And the upshot of these rising yields is it really, again, chokes investment in risky assets, because there is an incentive now to put your money in risk-free assets and just leave them there because you're getting a great yield with very little risk, compared to stocks, which are a big risk and a much lower yield. The yield on the S&P 500 now is about 1.5%. So we're actually seeing close to a 50 basis point discount now on those tips. And again, these are all negative things. The other part of it as well, yields in Japan are rising. That's not helping. Problems in China, that's not helping. You've probably read about all of those, and this is not meant to be a macro session, but I did just show people beforehand the practical application. I think that's what these sessions should be about. Yes, we're going to look at stocks, but a little bit of education as well. And if you remember, maybe a week or 2 weeks ago, we looked at this and I said, look, my discount rate, and I showed you how I get it. I look at the US 2-year T notes. I'm pretty sure they're notes at twos, and then the 10-year bonds, and I average those out, and that gives me this risk-free rate. And not that long ago, it's been trending higher from 4% not that long ago, but the last time we checked, it was 4.5%, and the average now is 4.6%. So if I just go back to here, 4.5%, and you can see that the valuation of Microsoft using the default settings is $347.71. That's my valuation. If I notch this up just the tiniest, think about how infinitesimally small that increase is, 0.1%. It takes $1 off the valuation of Microsoft. Okay, so I would want to pay $1 less for Microsoft. Now, of course, none of that matters to me. I'm a technical analyst, but Goldman Sachs has a spreadsheet similar to mine, not the same, but it's similar. JP Morgan, Bank of America, Citigroup, UBS, they've all got their own fancy spreadsheets, and they've all got a cell in their spreadsheet for that risk-free rate. And we are all, as analysts, having to put that up, which means the valuation, the fair value we can tell our clients, and that determines whether we call this a buy, hold, or a sell through here, okay, and through the price target as well, those are coming down simply as those rates are going up. It's scary on the valuation side of things, but the longer those rates stay up, the more likely it is going to break something seriously in the global economy. Okay, with that in mind, let us go to your request today. Probably everybody's just turned off right there. Carl, I've had enough. You've scared the pants off me. I'm too depressed. I don't want to know anymore. Let us have a look. Perry's always got some good stuff for us. Thanks to Perry and Michael saying change the screen. I wonder if I think I've been okay though since we started. Maybe that was before we got started. FSCO. If you missed anything, just expand on that. Say, hey, Carl, I missed the bit when you're talking about that. Credit Opportunities Corp. And I wonder if this, and I don't know what this product is. I don't profess to know the underlying fundamentals of all. There's about, I think, 11,000 companies listed in the US. Okay. But just from the name, probably something to do with those yields. And looking at the chart, probably something to do with those yields. Okay. So maybe this is a hedge against some of what we've already discussed. In purely just as a chart, I don't mind it. There's no long-term trend. Why is there no long-term trend? I can't zoom out any further than that. That's as far back as it goes. So we just don't have enough data yet to create the long-term trend, which, as you can expect, when you've got a 144 exponential moving average and a 233 exponential moving average, you need at least that many data points to get the ribbon. So I don't have it. But I do have a short-term trend. It is up. It's very clearly skewed to the upside there. Looks quite healthy. White candles all over the place, probably because it is linked to those rates, and those rates keep going up. And the price action is good, so no complaints. Could I buy it? Yeah, I could. I just don't know what's going on over here, and it's probably something to do with the IPO. Does it matter? Well, there still were people caught in around that level, but this, look at the scale. It's a very, very narrow scale. We're talking about going from 5.2 to 5.3. It looks like something to do with rates to me. And if you're buying it on the basis that if this goes up, it's going to hedge out some of the problems in your broader portfolio, I don't mind it. But I'm just going to keep moving, I reckon. I'm going to go, if you've got it, hold it, but I don't understand enough about it, perhaps, to call it a buy. IGIC, that is on the fundamentals and on the technical side of things. In International General Insurance Holdings, now one of the upshots of those rising rates is that insurance companies tend to do very well. We've seen it over here with our Australian insurance companies, many of which I have featured in my daily shortlist. And the reason for that is insurance companies, the model is basically take our premiums, invest it in risk-free assets, earn the return on those risk-free assets while you're waiting to pay out a fraction as claims. Okay, so when those yields are rising, it tends to help insurance companies, and maybe again there's a bit of a hedge here for your portfolio. I'm going to go a little bit of a ditto on the last one. I suspect there's something more going on here than I understand, because look at the sketchiness of those candles, and that always is a bit of a turn off for me. So I'm just going to say the leopard probably doesn't change the spots too much. And it is mainly, I would suggest, going up on something to do with those rates. But if you've got it, I can hold it. I can't see any reasons why you would sell it. I'm just going to refrain from buying it for a cleaner bunch of candles. Okay, otherwise price actions, because trends are good. I mean, it ordinarily, on the face of it, might get a go. But again, maybe it's just something in my brain that's saying, not so sure about that one. Let's look at this. GigaCloud Technology. I'm sure this one has nothing to do with rates. This one is moving on the basis of whatever it's doing. Very recent addition as well. You can see it only goes back to September or August 2022. I'm just starting to get an inkling of the long-term trend, which appears to be turning up, or at least if it was down, it was down. It's starting to contract, and therefore it is moving towards the upside. But what we have seen here is a successful move above that long-term trend zone, which is important for us. The point of demand that occurs above it is good, and then the price action from there is also very good and moving up to here. And I don't know where that last line is going to end. But what I can say in the analysis, obviously starting off looking at the short-term trend, is immaculate. Happy with that. Long-term trend, unhappy with that. I'm happy with this. The price action itself, which is where I go after I look at those initial trends, is good in that it is rising peaks and troughs, tick, but also that the last trough is That's not what I want. I want the box. The last trough is coming in at or above the second from last peak. The last trough is drawn there in green, and second from last peak is drawn in red. If you're not sure what the hell that's all about, there's a point of demand there. You might refer to them as troughs. That's up to you. What is a trough? It's a low point. And then we've got a point of supply here, which we can obviously refer to as peak, but we are seeing with the shadows there, okay, not a close beneath that level. That's important. It's okay. Those levels are spongy, and we can see, we should see in a healthy uptrend that where we have seen supply in the past, we should see demand in the future. Should see. It's not guaranteed, and certainly appears to be the case. And then I've got this great big white candle I'm really happy with. That upper shadow is not great, but last night's candle showing me that that upper shadow is nothing to worry about. It's got a nice high close in what was an otherwise terrible market. So we've done trends, we've done price action, we've done candles, and for me, I've gone tick, 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 and I can't see any reason on this one not to go plus 1/3. Now, what I like to do in these US sessions particularly, because we tend to have fewer requests, which means I've got more time, is go and have a look at the company valuations here. It's a GCT, I should say. Now, given it's fairly new, I'm guessing we might not get a lot of broker coverage here, but we can certainly see. I've got 2 brokers. That's 2 more than I expected. And you can see that the Thomson Reuters server is taking its time to gather. To be fair, there are hundreds and hundreds, probably bordering on thousands of data points behind this that it will then put in. Ironically, no data points there. And that's simply because the company didn't exist up to that point. But we do have, let me get this right here, error end of financial year. Match that up to December, and we do have the 2 brokers covering. So they've got a price target of $21, which actually gives you 78% upside if you believe that. We've got 1 buy, and the other broker has a target, not a rating. The EPS line, obviously we've got no history. That might bother some, doesn't bother me. Looking forward, the 2 brokers, all of 2, are modestly bullish. We've got a 5% compound annual growth rate from the bump that is this year. Okay, but that bump has largely occurred because we're August and that's December, right? So the 5% growth is not that impressive, to be fair, but we're not paying much for it, because it looks like we've got a median forward P of only 6.9. My model still says, and there's not a lot to go on here, 11.05 is the fair value, but that is a very low PE. I think we could certainly go higher, even if we called it low growth, which is fair on that. There's still plenty more in it. So why did I go low growth? PE of 10 is typically associated with a low growth company. A moderate growth company would be about 15. Okay, and a high growth company is about, well, I actually go 40. I don't use 20. That's where I cap out. That's what I could put an option there for 20. I just don't. 40 is where I cap out. But you can see mid growth. That's market growth. That's typically sort of below market growth, and that is what that is, 5% there. So I'm not completely at odds with that. There's no red flags in my valuation. That's all I'm looking for in my valuations. Is there's something really obvious here that tells me I shouldn't follow the chart, and there isn't. Happy to follow the chart on that one. Why is your discount rate the same as your risk-free rate? Good question, Perry. So Perry's asking about this. And what I have the ability to do, Perry, is change this. Okay, so if I go moderate, watch what happens to that discount rate, doubles. And we can see that we are more punitively discounting the company. Now, I tend to leave it at default unless I know enough about the company to change it otherwise, okay? And I don't know enough about this one. But what I can do, and this is what good fundamental analysis is, it's understanding the options. It's understanding the boundaries, okay? So completely irrelevant to me, but might be relevant for you, Perry. So if we're looking at this stock that you brought up, if I change the discount rate to 9.2%, many would argue obscure stock, hasn't been around long, not a lot of broker coverage, deserves a moderate risk rating. Look at that, the discount rate doubles. And we talked about at the start of this presentation, how when you increase the discount rate, you decrease the fair value. So we're more punitively discounting those future cash flows. And this, again, that is another cell that will be in every spreadsheet of all the big brokers, but they might have a different relationship. So you can see my relationship is moderate doubles the discount rate. Might sound harsh to you, but that's the way I do it. And then high triples it, okay? And then you can see, if we go up to that, now it's only fair value. Very interesting. or maybe not. If you're a technical analyst, none of that matters to you. Okay. But hey, I am classically trained, everybody. I did come out of university in my postgraduate degree. I spent, I think it was 7 years in total at university studying finance. I did come out of it as a value investor. That didn't last very long, don't worry. So I do know what all this stuff does and how it works. Some people think, oh, that Carl, all he does is looks at charts. He's got no idea. No, I actually do understand all the stuff you understand, but I can do the technicals as well. From Adrianto, hi Carl, interested to see your view on these two oil companies. I'm always interested in oil companies because oil price starting to pop back up. I've put in my short list locally a bunch of oil companies over here. So let's have a look at some of these US ones for Adrianto. First we're going to do is WTI, which is the most amazing code, and that's not it. Don't panic. It's coming in a second. Of course, WTI, West Texas Intermediate. It doesn't look good though. In fact, looks really ordinary. Why? Does it look ordinary? Why does Carl not like it? Okay. Long-term trend is down. Short-term trend, and again, I have no idea what the company does, nor do I care. It's all that matters to me is what everybody else thinks about it. And that's where my trends and my price action, my candles come into it. So short-term trend is indiscriminate. We can't really tell. It looks pretty orange to me, or flat. And it's a traffic light system if you're unaware. When it's green, we can look to buy stuff, both in the short-term and long-term. When it's amber, we should not be really in the market. When it turns pink, we'd prefer to be out of that market. And you can see we're more on the pink side of things. So I cannot get excited about this. Price action, again, we talked about what good price action is, and we said good price action looked like this, where the the last trough or last point of demand was coming in at or above the second from last point of supply. And in fact, the price action here is extremely compressed, meaning there's significant indecision in the market. I mean, you look at this price action and you think about, well, ask yourself this question. You should ask yourself this question about any stock you're interested in. What do the holders of this company, forget about the chart, because let's face it, you and me, we look at charts. Most people don't, right? What do the holders of this company think about the future earnings? Because that's what it all comes down to. I truly believe stock prices are based on earnings, not based upon charts. Earnings prospects of the company. Okay, you have to ask yourself, what do the holders of this company, now I'm talking about this company here with this great price action, I'm going to put to you that the holders of the company with the great price action, they think that this company's earnings are booming or about to boom. And that is why they're not selling. And that is what's facilitating the rise in price, because at the same time as you've got the holders thinking that this is a great company with great prospects, well, what do you think the holders of cash? That's what we have to think about. What do the holders of cash think about the future earnings prospects of this company? And don't forget, there's a lot of competition for cash out there. We started this conversation with how good real yields are right now. So do I want to have my money risk-free, earning 4.5%, nearly 5%, depending on which bond I'm buying, or do I want to be buying this stuff and probably earning nothing? So now the reason why I might buy this stuff is I think I've got to earn a return, a risk-adjusted return, so adjusting for the fact that this is not risk-free, but I'm going to earn a risk-adjusted return in excess of what I can get in that risk-free return. And if that's the case, the cash is going to want to buy. Okay, now I'm talking about this company here, not this company. I know this is hard to understand. Not this, because this is a pile of junk. Okay, I'm talking about this. Okay, the not pile of junk option. Okay, holders of cash think it's great. They keep buying. They keep buying the pullbacks. They're not selling the rallies here. They're selling the rallies, or they don't know. Okay, we're going to have green zones, uptrends, white candles, because they think this has got a great forward risk-adjusted return. Hey, this is all about forward thinking. Everybody says, hey, Carl, technical analysis, like driving car, looking in the rearview mirror, ha, ha, ha. You know what? So is fundamental analysis, buddy, because it's all about what you think's going to happen. And if you're doing fundamental analysis based upon what happened last year, you're doing it wrong. So the expectation is that this company is going to have improving earnings and the returns are going to be better than the risk-adjusted return on, the risk-adjusted return will be better than the risk-free rate. And here, the people who own it are hanging on. Now, let's go to the pile of junk company. With all due respect, it's a pile of junk, because the people who own this company, they're not holding on to it. They're happy to let it go. It rallies, they let it go. It goes down, they let it go. The people who have cash, they're not piling into it. Not yet. Hey, what could change? Well, it needs to do something like that, doesn't it? It needs to do that, needs to do that, needs to get into there, needs to do some time there, needs to get above that, needs to do a lot more work. So that's a big no for me, unfortunately. Now, I totally accept that tomorrow, wherever they're drilling offshore, they could strike it big, and this stock could be trading at $10 tomorrow. It's absolutely possible, but looking at the chart, it's probably not likely. That's all I know about markets, everybody. I don't know anything more about markets than what I just told you. Okay, let's go to the next one, which is OXY. This is a big, big company, Occidental Petroleum, and it's been around for, I'm going to say 100 years or more, probably. And it looks like very sideways to me, but starting to improve, not dissimilar to our Woodside chart, but Woodside is somewhere up here at the moment, possibly to do with currency fluctuations, maybe, I don't know. But it looks okay. Look, I can hold this one. With the other one, I didn't have a lot of interest in holding. I can see the white candles coming in. I can see the price action is improving. I can see the short-term trend is turn up, and the long-term trend is actually reasserting itself. And we're also seeing a bit of a hold here, a bit of a test and hold long-term trend. The only problem with this one for me is that there could be some pesky supply in the market at those levels. You can see already how this last point of supply is influencing current price. We're seeing some supply manifest itself in here. A combination of that supply level and a combination of the broader market is a bit rubbish at the moment, and oil prices actually pulled back a little bit. So I could go a hold on this. It wouldn't be a full hold, and this is where the other part of what I know comes into it. Okay, so I told you everything I know in the markets before when we talked about the WTI, right? I drew all that stuff. This is the other part of what I know is it's one thing to have an idea of what's going up, what's not going up, and what's going down. The other thing is how much am I risking when I'm doing it? And what I would say on this is if I had it, I would not be holding a full risk position. An FRP, I'm going to get used to me using this terminology because I can see the point of holding it. And personally, I wouldn't own this. You know why, right? But if I had it, I wouldn't be holding a full risk position. Kind of the most I would have on this at this point in time, say plus 1/3. But hey, if it can close above that, I might go another 1/3. If it closes above that, I might go another 1/3. So that I am holding a full risk position once it starts to push through 68. Okay? Because then it's telling me the demand is coming in. I'm probably on the right side of this market. Okay? If it starts to break through 56, it starts to break down through here, well, that would be probably way past where I would hold it. But certainly through 60, I'm probably then going to be eliminating that plus 1/3. Okay, so that would therefore say minus 1/3 here. Okay, and this is how you got to look at your stocks. You've got to stop thinking that they're Occidental or they're oil companies or they're healthcare companies or they're consumer discretionary companies. You've got to stop thinking about what they do, and you just got to start thinking about whether the market likes them and how much risk you should have on them at any one point in time. They're the two things I know about investing. I just taught them to you, and do what you have to do with those two things. Okay, let's go to Haraju's got REKR. Ooh, I like this one. As a turnaround play, turnaround plays are always super extra risky just by the fact that we're still early in this sort of resumption of demand and this idea in the market that we want to start withholding supply again. Now, through here, this is all about withholding supply. This is all about throwing money at it, okay? Don't forget, we know how to get out of stuff, don't we? Didn't give you much warning here, actually. Didn't give you much warning, but certainly the black candles were a good indication. I like this little move here, and I'm going backwards, but I just want to look, again, it's just about seeing as many scenarios as you can so that when you see the scenario that you're in, you know what to do. So give me a second on this. Is this candle? You answer this. I can't hear you, but you answer this. Is this candle enough? Is this candle here enough to get out of that trend? We saw, try to get a bit more chart in, that trend. The trend was, look, amazing up to that point, isn't it? And I would have been telling you to buy it on that day. You come into my sessions, Carl's a buy on that day. Okay, coal would have been a buy plenty of other days through there, yes. But on that day, if that's the first time I saw it, I'm telling you to buy. Okay, so let's say we did that. Well, let's say, I love doing case studies. I think we should just do webinars where we just do case studies. I'm trying to find the 3 buys here. Where do you reckon they are? I don't want to scroll back a bit, but I reckon, because I just don't want to lose my spot. But I look somewhere around here, I reckon, maybe plus 1/3. You might have a different opinion. At 3 here, probably going to get another one. Oh, that one's not bad there. That's very good. This candle is disappointing for me, but here, that's the confirmation. We just saw a chart that looks similar to that, plus 1/3. This one here, I would have loved it to close on the high. This is very encouraging. Maybe I would have liked it to close a little bit more on the high there. But I think at that stage, that's looking pretty good. Maybe not here. I reckon here it's a plus 1/3, or certainly here. As this one here. I think by here I'm really confident now that that's going back up. Okay, so let's say there's our plus 1/3, and for argument's sake, each time we did that, our risk management model said we were going to buy 2 shares. Okay, plus 2 shares, plus 2 shares. Okay, and now that's today. And let's say we didn't buy the 1/3. I know I said I would, but just to try and keep this simple, I stuff it. Let's put plus 1/3. I just wanted to divide by 3, but now I'm going to have to do some maths. Okay, so now I've got 8 shares, everyone. 8 shares. Okay, plus 8 shares. Now let's, you tell me. Shout at the screen. I can't hear you. Is that enough to get you out? Oh, you could type it in. What do you reckon? Got lots of people here. Plenty of Zoomers, plenty of streamers. What do you reckon? Is that candle enough to get you out? Start typing. Tells me you know what's going on. No, says Barry. No, I don't think it's enough. Oh, everybody's just being lazy, just listening. Or they're playing Tetris on their phones. Not yet. No way. Good. No, that's what I want you to say. Now, we know the future. Rob says no, says Nick. We know what's going to happen, isn't it? We know that was the best time to sell, because we can see the future, but in real life you can't, and that sucks. So you tell me. I'm just going to skip forward. Tell me when, I'll spend 10 seconds on each candle. Tell me when you think you need to go minus 1/3 based upon all the stuff I've taught you. If this is the first time you're listening to me, you've got no idea what's going on. I'm getting warm on that one, but I still don't think, yes, says Doug. Exactly, So the reason why this is a is that shadow there. See that shadow? That's a little point of demand, isn't it? In itself, no, it's not a trough, but in itself, it's a point of demand. And then look what we did. We went and closed beneath it. And if you're the most risk-averse person, and or you just want to maybe just put some money somewhere else, I could see why you might go minus 1/3 there. But I'm not going to write it in, because I think you're being a bit flippant given how good this trend is. Okay? Now, I've picked one here. I want to do this because it didn't give us a lot of opportunity. It kind of just went south really quickly. Hey, is that going to happen to you? Yes, it is. So let's learn. Let's see how to get ourselves out of something that just cracks out on us real quick. Rob's going minus 1/3 on that one. Haraju, a few other people, Steve up to this point, no. Barry's kind of going now. Steve's going now. And the problem here is we've closed beneath the short-term trend zone as well. And you can see how well this trend zone has done in keeping us up. It closed beneath here. And I would have advocated 100% here a minus 1/3. Now, that would have been a horrible place to get out, right? Horrible place. But I still would have advocated for it, okay? Here. We've held it really well. I'm with you guys. I reckon, and girls, I reckon this will change to red. I reckon this is my first minus 1/3. Type, Carl, type, minus 1/3. Now, how many shares have we got? We've got eight shares. So 8, I'm not even going to try and do the maths. 8 divided by 3 is 2.66667 shares. Now, that gives you the option. You can do 2 shares or 3 shares, okay? Because you probably can't do 2.6667. So let's say we're a bit nervous. This, it's a bull market. There's lots of other stuff we want to do. Let's go minus 3 shares here, okay? Now, let's keep going forward. We don't know what's going to happen next. Okay. Do you need any more convincing? And I don't know, maybe you love this stock, Rekor Systems. Maybe at the time, it was the AI stock of its time. Everybody loved it. For me, I'm looking at that and going, why am I still in this? I don't need to be in this. Okay, but let us stick to the system. Now, we got rid of 3 shares, so we've got 5 shares left. Okay, so again, you can't see me doing the calculator over here because it doesn't come up on OBS. But I go 5 divided by 3 is 1.6667. Okay, now I can either do 1 share or 2 shares. I think I'm going to do 2 shares here, and that leaves me with a total of 3 shares left. Is that right? Yes, that is right. Okay, so let me, I want to go here. I should have typed in there. Let's go SH. Okay, so now think about where I started getting into this. Okay, I'm losing on my last addition. If I've gone +2 here, I've gone -3 here. Okay, if I've gone +2 here, okay, or here, I've gone -2 here. That's a break even. I'm still making money on these last 2. Okay. Oh, look at that. You could have even viewed, and I've gone too quickly, but you could have even, what do you think about that candle? Is that the candle, after what we've seen, is that the candle that tells you, oh no, everything's fine. Everything's fine. Nothing to worry about. I'll hang on to my last batch of shares. Is that the candle that tells you that? I don't think so, but maybe you're a bit premature going there. And I know you probably all still, it's a weak response, says Barry. Okay. And I went too quick, but like for me now, there is absolutely no reason, even if I didn't do it on the day before, everybody's reacting, short the crap out of it, says Adonis. And I can't short this one Adonis, but that doesn't mean you can't. And the reason why I can't short this Adonis is because it's still in a long-term uptrend, and that's not my model. Okay, I want to find the weaker stocks in the market to short them. And we had 3 shares remaining. I can't see any reason why you would still be, 3 shares remaining here. So I can't see any reason why you'd still be in after this. Now, what was the point of this exercise? And thank you for everybody who got involved. There's no point, really. Is this going to happen next time on any stock that you've got? Hey, why should history repeat? It won't necessarily do that. But I want you to get in the habit of doing this stuff. Where's the harm? If you've got some spare time, right? I mean, how boring and lonely must you be if you've got spare time to do this? Probably a bit like me. But just find some stocks and just go through this process and see how it turns out, okay? Now, did we get out the top? No, we didn't, okay? Absolutely not. But hey, I wanted to pick one that just kaputted on us. It's not always the case that happens. Now, do we care what's happening here? It's not even, do you realize from here, it's not even coming up on our daily scans? And the reason why it's not coming up on our daily scans is because of these trends. And this is kind of the beauty of using this model. You're done and dusted. You never have to think of Rekor Systems again until it comes back up on your scans. And if it does, you go, oh, okay, I haven't traded that for a while. Maybe I'll trade it again. We're not going to sit here lamenting how we didn't get out at the top. And if you're silly enough to still be holding, well, we wouldn't be, if you get what I mean. We're not going to be trying to say, well, is it time to buy back? Okay. Would we have bought back there? I'm not even going to go to that. Maybe you might have been a plus 1/3 before it tanked again. Maybe you would have got tagged on it. Would you have been buying using my model anytime through here? And the answer is confidently no. And here we are. Look at this. I think this is wonderful. Here we are. It's, like, I remember, Rekor, I traded that a couple of years ago. I remember that was the one that really tanked on me. I still managed to squeak out of it with a little profit. Lucky I got out because that just was awful. But look, now it's back on my scans. It's coming up again. Would I buy it now? I don't know. What would you do? Should we buy it now? This has gone from me doing the analysis to everybody else doing the analysis. Maybe there's another webinar where this is all we do. We don't even, we take a few case studies and we just work through them, and then you shout at me what we would do. Haraju's saying yes, but Haraju put this one up. Price action. Price action's not great yet, says Rob. And I'm not sure I think maybe the streamers have left us. They're gone. Look, price action isn't ideal. We're not high peaks and high troughs yet, but we're compressing. Why are we compressing? Why are we compressing here? There's something going on up here. So this is the level here, which has stopped the upward momentum. So why there? What's going on there? Is there something there that we should be aware of? Let's head back here. Oh, well, it is. In fact, you know what? That's a really important level. This was a major point of demand. There are a bunch of people that got in here for the bounce, right? The bounce. Now, how did they feel? How did they feel? They feel down here, right? They felt pretty lousy, right? So they're not going to get out there because they're not us, right? They are you before you started listening to me. Oh, I hope it goes back up. Oh, I can't believe I got in at $4. Oh, I thought it was going to bounce, and then it went down, and I should have got out. I knew I should have got out straight away. Oh, now it's $1. Oh, please, please, please. I just want to break even on this so I can get out. This idea of breaking even just so you can get out. Hey, not everybody's going to feel like that, but some people will. And those some people will create a latent supply in the market at these big levels. And that's why we're seeing that old point of demand act as a current point of supply. But I think we're building up to it. I like this candle here. I think we're removing some supply. Every time I say the words removing supply, I look down to volume. I do this, maybe you don't see me do it, but I always go, well, are we really? We're not actually not removing that much supply. I think last night we started to remove some of the supply that's here. We're starting to interact with it. So I think this is very warm. I think we spent too long on this. It's one I could definitely keep an eye on. If I saw a white candle, let me say this: if I saw a white candle that closed anywhere near that point of supply, it doesn't have to close above it. And this is where I think technical analysts do get it wrong: is this idea of waiting for a breakout. And some people argue, oh, look, it's safer to wait for the breakout. It's safer in that you are sure the point of supply has been eclipsed, but it's less safe in that, well, the latent demand, more latent demand is already in the system, if you get what I mean, to take out that point of supply. So I prefer to, if I get a good candle beneath that point of supply, I don't wait for the break of supply, because I don't want to use up, as assuming there's a finite amount of demand for this ever, I don't want to use up all that demand in that breaking of the point of supply. I can tell with confidence that if we close like that, that the point of supply is not an issue, and therefore the breaking of the supply is far more likely. And I'm not going to burn up a bunch of demand when I get in. Somebody else will do that afterwards. So that candle I could get very interested. I'll go plus 1/3. But for today, I think there's enough supply in the system and not enough supply removal exhibited through the volume yet to go the plus 1/3. Okay, but what a fascinating case study that one is. All right, let's look at your next one, GAMB. I'm going to pick up the pace. Okay, I would love nothing more than to just do sessions where it's just all case studies and education and just showing you how I look at the markets, which is 30 years of looking at markets. You tend to learn a few things, mainly from your mistakes over that time. Gambling.com, what a great name. Yeah, I could buy this. 15, maybe it's an issue. Have we ever been to 15 before? No, we've been to 15 before. We're through this point of supply here. Round numbers tend to be more influential the first time you've ever dealt with them. If you've been there before and you're coming back through them, they're less important. So I'm not too fussed about that. Big white candle. Ideally, it closes on the high, but it's closing certainly within 10% of that high. The price action looks good to me. Compression here, black candle. Maybe the market wasn't good on that day. Maybe there's some news. I don't know, but at a point of supply. So it's logical. It's logical for us to see bad candles there. You can't just go, oh, this has got a bunch of bad candles. Well, if there's a reason for those candles to be there, if there's a reason for that supply to manifest itself there, I give it a bit of a free pass. So I'm okay with it. I'm happy 1/3, and some people are going to say, Carl, look, I respect you. I respect what you're saying, but there's no way I'm buying that. It's gone up too much. Okay. I'm a plus 1/3. I'm happy to put some risk money on this. I'm not throwing the house at it, but I love big white candles. I love gaps, and that's got both of them. Let's have a look. Is anybody interested? Let's have a look at GAMB over here. Or are we okay that we don't need to look at the fundamentals anymore? Just look at the charts, Carl. You've convinced me. I give up. I concede. You finally wore me down. Technicals are enough. Okay, Thomson Reuters, do your thing. 8 brokers here. The more brokers, the more confidence we can have in this data. We've got a price target of $15.62. That's 6.3% upside. Fairly newish, I'm guessing. That's why this has not come in, but we have got the data we need. We've got 3 strong buys. That's impressive. 5 buys, no holds, no sells. That's impressive too. We don't have a lot of earnings history, but let's look at the EPS line going forward. We saw a dip here. Not sure what that could be. I mean, you can't really blame that one on COVID, but something's happened to go from 50 to 6 to 60, then to 81, 88. The growth is good. Not great through here, a bit lumpy, but good. 19% compound annual growth looking forward. We can't leave this at low growth. That's why this is looking odd, but we do not have the default settings. The default setting would be to look at what the brokers are sort of expecting over the next few years, and that's a median of 17.4. I don't know enough about the company to change this, but I can show you how it does affect things. If I was to change this to a moderate risk rating, it would mean that it's above fair value right now. But if I'm going to go with a low risk rating, and only you would know whether this is valid or not me, because I'm not going to be bothered to go and investigate this company any further than what we're doing, because I couldn't care less. I'd happily buy it. 1573 is, lo and behold, there you go. And it shows you that my spreadsheet probably, and I do generally just use my default settings, my spreadsheet on the default settings tends to be pretty close to what the brokers are thinking. But it didn't cost the millions. And you can imagine how much Goldman Sachs' spreadsheet cost to develop. Okay, let us keep moving. I'm going to have to find, I'll do the streamers. It should be easy to find your requests. Let's go to Simon. Simon, hi Carl. For someone short Netflix, oh, you got my attention there, NFLX. Okay, I can see where you're coming from. Someone short Netflix, where would you recommend they cover back their shorts? What are the major points of demand? All the armchair technicians on Twitter are telling me about the head and shoulders and the long short term. Okay. First and foremost, stop getting your technical analysis off Twitter. That is what I would suggest. Look, you're more aggressive than me on shorting this. What gets my attention for a short? And every time I'm going to say that, I'm going to say not for me, but what gets my attention is this big gap down, the black candle. We start to change, obviously, the short-term trend. You can see it compressing, and then you do change through the price action. Okay. Now, we do actually have a little up here. So there's your downtrend. And then it does actually push back up. This is why it's hard to short these things that are still in uptrends, because, they're still prone. The market is still prone to buying that dip. But this is the key for me, certainly a move through here. And you can see where, and now this is taking what I teach you to a much higher level. But in terms of hedging yourself, so there's a couple of ways you can look at shorts, all right? It took me a long time to figure this out. You can short stuff that is top left, bottom right, okay? And that stuff has been going down. You know what? Actually, I'm not going to do it here. I'll do it. I'll save it another time. And I'm not trying to tease you there. It will just take too long to explain it. But I'll summarize it here. I actually don't mind, purely for speculative hedging purposes, right? Just as a hedge to get some risk on the short side on stocks that kind of have had a great run. Okay, and it's just about mixing up those setups. So we talk about often getting a mix in long setups between your turnaround plays and your bottom left, top right continuations. And ultimately what I was about to say, something very similar to that. And this would be your higher risk short on your turnaround play. Okay, now ideally it's already interacted with the long-term trend zone. It's doing the opposite of what we want to see for long. So it's come below this, it's tried to break above it, and it's falling. But there is a case for going more aggressive on this, just in terms of the correlation of stocks that have done well in the bull market and stocks that have done poorly in the bull market. Okay, and the stocks that have done well in the bull market, when the bull market changes, will do worse than the stocks that have already done poorly. Okay, and there's a reason for that. But what I'm saying is this is where I could short it. Your question was where should I be looking to cover back? And my answer is, I don't do targets, okay? Unless there is the most almighty point of demand that's so obvious. And for me, through here, I can see this is the most wonderful picture of demand through this candle here, through these candles here. So it's, and then we've got this here, okay? So the old points of supply. So old POS acting as a future pod, reinforced here POS, but this white candle, this is the most classic setup here after a gap and then a breakthrough. Your demand is here. This is where your demand is. So now this doesn't mean I would cover it all back there, but I would certainly go plus 1/3 on a move to 380. So I'd have that order set up in the system ready to go, okay? But only for a third. and then I would see how the candles respond there. If we get a big black candle through there, I've just taken a third profit, but I know I need to hang on to the other 2/3 because this is not behaving as I expected it would. The demand I expected to be there is not there. Okay. If I get a big white candle, lower shadow here, I've already got out a third, and then I might get out another third. Okay. And I might save the last third to just above that short-term trend ribbon, wherever that ends up being. I think I've answered your question, Simon. Let's go to Rapam, who's asking for RUN. Okay. Well, I'm guessing this one's for a short as well. Should we just sell everything and run? Oh, no. Okay. Rapam is saying, should we sell everything and run? He doesn't actually want to do a run. But this is an incredible stroke of fortune because I was talking about the idea between shorting Netflix, something that has enjoyed the bull run and is just turning, and shorting something like this. Now, I reckon they'll both probably go down, but the higher beta play will probably go down faster than this. And it might surprise you, but that is my experience. But I think you can short that one, Rapam, even though that's not what you asked me about. Should you get out of everything and run? No, I don't think you should. I think you should do, remember we did that case study. That's all you have to do. Just keep doing it, but do it on every stock and be true to the process. Okay. And don't be that person that says, oh, but if it goes back up, just follow the bloody methodology. Now that I've said that, only follow the methodology if it suits your personal preferences, if you've taken on professional advice, because everything I tell you is general in nature. Okay, do you get where I'm going with that? Okay, let us do. Kirsty is asking for JHX in the US, which is cheeky because really she's asking about JHX in Australia. And look, the big gap up, it's all good, it's fine. If you were just the most nervous Nelly, I can see a reason to do minus 1/3, not because I'm making it up, but because it's done everything I've taught you. And these black candles here are a minus 1/3. Okay, but that's all I can see there. It's just a precautionary measure. It's pulling back because the rest of the market's a bit lousy. But for me, I'm totally feeling the need to be plus 2/3 remaining on this one. Okay. Let us go NPC for Brett. Yeah, look, Marathon Petroleum, that's one of the oil companies that's doing really well. This is, for whoever asked me about the oil companies in the US, look at this one. This is the one that looks the best. And it's pulled back. All prices have pulled back. The rest of the market's a bit rubbish. But this old supply zone will probably be the demand zone. And this is a tricky one. Those three candles are not great, let's face it. They're not confirmed yet. Would you be a minus 1/3 simply based upon those three candles? I'm not so sure. I think the trend is good enough. But where it does fail for me is if we see this. Okay, so the confirmation of those three, what those three candles are telling us. Those three candles are speaking volumes. They are telling me that supply is in the market. We've found the supply. And any confirmation of that, therefore, would be a minus 1/3. So it's not a buy for me, obviously. We've got those three candles there. We have to respect that. Not a buy yet, but it's closer to a buy, long-term buy than it is for a sell. If that makes any sense. I don't know. It could be one more candle to a sell, but I'd still want to be buying it at some stage. Maybe that's the way I should have put it. I do like that one. Okay, because I've asked you to make so many comments, I've got comments everywhere. So let me try and find the next one, which is PVL. How are we going on time here? PVL. Not too bad. We've got about 10 minutes left. Permianville Royalty Trust. I'm guessing that's another energy company, but it's just a guess. Royalty Trust. As a turnaround play, it looks okay. Last night's candle is important, but there's not enough in it for me to want to buy it just yet. And I know it gets frustrating when I do these things like price action like this, but that's just the way I work. I need to see some more confirmation. But the fact that it is, this is obviously up, it's starting to turn the corner here. It's held that level is important. And I could see this figuring as a potential turnaround play in the not too distant future, but there's not enough in it just yet for me to want to go plus 1/3. Big white candles certainly will change that. A nice little hook higher with the right candles also could change that. That one was for Steve. For Ben, ALSN. I think it's fine. Again, I think if you're knocking some off on the basis of that, I think you're being quite jittery. the price action is compressing, but the rest of the market's rubbish. At the end of the day, this is still outperforming the market and really well. But we do, I mean, it is a bit of a rubbish market right now. And even the best stocks, they can crack. And when they crack, they'll crack quickly. And you just have to decide, don't you? As Rapam said, should we stay or should we run? I don't think it's a run. I'm a hold here. And places I would be looking, these are not great candles, no doubt. But certainly close beneath here, I think you're going minus 1/3. I think that makes a lot of sense. Maybe there's a really black candle that could make you go minus 2/3. Okay, it's up to you. But I still think you've got some skin in the game on this one. But a tricky one. Hey, it's hard for you. It's probably hard for me as well. Ben, just putting some color around Ben's request here. It has not really been hit too hard lately. Yep, good. One on the watch for a push past 60. Okay, so I don't think Ben's in it. Ben's looking to buy it. So that one's easy for me to say. It's not a buy yet, but hey, we just need to see some white candles. And if the rest of the market picks up, this one leads the charge. I could happily look to buy this one when that occurs. So until then, hold it, but not a buyer. From CNX from Max, let's go CNX, which looks great. I'm not a buyer on last candle if you don't have it, but if you do have it, I'm a holder. I can't see any reason to get out just on that candle. There's not enough evidence there that supply is really having a major impact. And when I zoom out, I see that we're not really at any major sort of supply zone either. So I can't see any reason why in a market that is so bad and where this is doing so well, why it can't continue to do so. I mean, if it hasn't gone down in the market we're in, why would it start doing that tomorrow? So a happy holder on that. Could I buy it? Well, you can. I was going to default going to say no because the last candle prohibits me from doing so. It's not bullish enough. But just in terms of if I was to get in, say around here, and if I was to look to where I might need to get some out, and then where my stop might go, say here, I'm not sure if we're getting 1-to-1. You could massage that to make it happen, but it's not an obvious 1-to-1 minimum. Bossman, MP1, nice uptrend. We did do that one. That's the marathon. MP, no, is it? No, that's MPC. MP1. Is that Megaport from James? You're talking about ASX Megaport. Sorry, I'm getting a bit confused here. It is a nice uptrend, but that's not what we're here for, James. So only US stocks, please, in these sessions. We do Aussie stocks on Tuesdays if you are confused. BHR. Let's have a look at that one. I think that's one we've done recently. It's not that one. Let me go back here now that that's gone out of whack. You can see the vagaries of the vagaries of Amy Broker. Okay, well, what are we asking about this one for? Short, says Perry. Yes, short. But Perry, $2.60. I know in percentage terms it can go. There's still 100% to go down, but price terms, it's $2.60. Can only go to zero. But think about that mix of shorting some stuff that is turning off those highs with plenty of confirmation, or shorting the stuff that is already a long way from the light pink zone. But no, conceptually, no objections at all there at all. James asking for MP1 over here. No, James. Let's go back to here. And VG for Neil. I don't know if Neil's asking about VG or he's saying very good. I think he's saying very good. Let's go down the list. Kirsty asking about sell stop. Not sure what that one is. Like the case study walkthrough, says Huzul. Thank you, Huzul. Hi, Carl. Can you please have a look at ELF, another energy company? Oh, I know. ELF. There isn't ELF Energy. This is ELF Beauty. Okay, well, what do you reckon we need to do? It has been going so well, hasn't it? You can see we've had some history on this, plus 1/3 there. That's a compulsory for me, isn't it? That's do not ask questions, do not pass go. Minus 1/3 on that candle. I think you might need to do another third just on the basis that it has changed its price action. Okay. And again, it's about giving you something that's systematic, something that you can apply on your own. You don't have to ask questions. Well, I wonder what Carl would think. No. You can draw this stuff. So let's go minus 1/3 and then go minus 1/3 there. And at most, that means you're a plus 1/3. And it depends on how much you love the company. Some people do love their companies, despite everything I say. You might leave that last 1/3. It's only a few shares now, remaining until it closes beneath that long-term trend zone, if you want to give it that sort of room. Okay. For me, I'm looking at this and I'm going, let's go find something more interesting that's got more upside momentum in it, to be honest. The close beneath the long-term trend zone. The short-term trend zone might get you out that final third as well. NVST, this one is for Marco. Repeating my long comment was tongue-in-cheek from Simon. Okay, let us go to about the Twitter technical analysts. I think this looks like a great short, Marco. I'm sure that's what you're asking, why you're asking about it. I've no doubt, Marco. You've been in my sessions many times. You're not asking about this for long. Yes, I agree for a short. Minus 1/3 from me. Happy minus 1/3. You might say, I can't wait for it to break down. I say, no, I think that's good enough. I'm happy with that last candle. Thank you, Marco. And if I've got that wrong and you're looking to go long, then I think you already know all the reasons why I can't go long that one. All right, well, that's the end of the list, everybody. If I have missed one of yours, it is possible, but it's simply because there's lots of stuff going on. FRPT, sorry, Adonis, FRPT. I think this looks really interesting, Adonis. Are you on it? If you're on it, I'm a happy holder here. I know these candles aren't great, but the market's been rubbish and it's been so strong. I mean, it is admirable as to how strong this has been. And it's just a wonderful looking turnaround play. It's such a classic turnaround setup. Problems up here, but miles and miles away. Not too worried about the $100 round number. We've been there before. I really like this thing. And you know, the white candles, so many white candles, big ones as well. Very little pushback, very sort of shallow pullback into this range, and hasn't really closed, or hasn't closed. I reckon beneath the midpoint of this candle. I don't think so, but still very good. Look, I don't want to see, as good as it is, I don't want to see it close under here and under there. I reckon, for me anyway, minus 1/3 beneath there. But happy holder in the meantime. Can I buy it? No, but not based upon last night's candle. But on the next really nice big white candle pushing up towards, say, 83. Let's say 83. Big white candle into 83, closing there. I could add a third on that one, Adonis. Okay, let us adjourn then. I'm going to head back to the preso here, and I'm going to say, obviously, thanks for joining me today. But if you want to get that Megaport analysed, James, hit me up on the Tuesday session, 1 p.m. If you want to do the macro, we started today with a lot of the macro, but we do an in-depth macro investigation on Thursdays at 1 p.m. These are all Australian Eastern Standard Times. And then obviously we're here today, Friday, 1:30, but people do catch this in the recording and they may wish to catch me live. To do that, head to www.thinkmarkets.com/au/webinars. If you're not a client of ThinkMarkets, well, you should be, because we are the best in the business if you're trading Aussie shares. Not the topic today, but $8 HIN and CHESS sponsored. It is important that you do have CHESS sponsorship so you know your shares are yours. Over 4,000 CFDs, FX, indices, commodities. What we can do, and I'm only going to take 1 second. In fact, I was going to show you how to short sell stuff. I should have done it. And maybe we'll do another webinar just on short selling. How about we do that? We'll just do some case studies. We'll do some short selling in another webinar. But you can do that. Everything we've talked about going short today, you've probably gone, oh, that's not for me. I don't know how to short. I can't short. Carl's talking about some other people. No, I'm talking to you because you can go short. It's not that hard. You do it with CFDs. You do it with us. And it's just as easy as going long. And you can have 10 short positions. You can have 20 short positions. I'll tell you what, if we're in a bear market, that's where you want to be thinking. So head to ThinkMarkets, open up an account. You can open up a demo if you just want to get started, figure out how it all works. Okay, open up a real account if you want to start trading. We're an award-winning broker, regulated all over the world. We've got offices all over the world. We've got the best platforms, dedicated account management, 24/7 customer support, and you can call us on the phone. ThinkMarkets.com for details. And Nick has also put in a demo, a link to the demo account. If he hasn't, he's going to do that in a second. And that's how you can do it. I'm going all over the place now. Apologies. If you're watching on the streaming services, hit the subscribe button to stay notified. I do go live a few times a week, and that'll keep you updated on that. Hit the thumbs up button to let me know you like what I'm doing, so I'll continue to do more of it. Apart from that, it's been a pleasure chatting with you today. Hopefully you learned lots, got lots out of today's session. There's always more to come. All the best for your trading and investing. Until we catch up again. Bye-bye for now. Before you run away, just reiterating that everything we've discussed today is general in nature and has not taken into account your personal financial circumstances or particular needs. So before making an investing decision based upon this very general advice, please consider it carefully or seek the help of a financial professional. The rest of the information in that disclaimer is important. You should read it. And if you've got any questions about ThinkMarkets products and services, head to our website, download our product disclosure guide or our financial services guide. Bye-bye.